we have a fun little AMA session. It's actually an Ask Me Anything session, and we call it Tax Tuesday. And you can ask me anything about taxes, about business finances, how to optimize the business, anything like that. And I'll do my best to answer it. But real quick, like my name is Luke, and I'm a business advisor here at Collective. And Collective is essentially your first all-in-one online back office platform for your small business. We'll pretty much handle the whole shebang, when it comes to the finances. But today, I'm here to talk about taxes. And before we kind of continue on here, it's important to note that, technically, this is just information. You know, don't consider this legal advice. Don't consider this tax advice. It's always a good idea to you speak to a CPA or some sort of tax professional before you go forward with any of this, any of the content in this discussion. So just keep that in mind. But let's jump right into it. And I believe we already have some questions that we can get started with. Okay. What is an S corp? Well, that's a good question. Since Collective is an S corp company, but essentially, an S corp, it's actually it's kind of weird because it's not what it sounds like. It's not what the name implies that it is. If you excuse me, if you just hear the word S corp, you would assume that meant it was a corporation. That it was some sort of business structure or corporation, but it's not. It's actually a tax selection. So it's a way to ask the government to tax your business in a certain way. So, for example, let's say you are a sole proprietorship, which means you don't have an LLC set up. You don't do anything like that. Then, or if you have an LLC set up, then all of your net income or a huge chunk of your net income is subject to the self-employment tax. And the self-employment tax, it's a flat tax rate of 15.3%. Before you make an S corp election, all of your money is subject to it. So let's say that you make 100K or your business nets 100K. And when I say net, I mean after your business expenses and everything like that. But before you become an S corp, how you'd come up with your self-employment tax is you take 100K and you'd multiply it by 15.3%. All of your money is subject to it. But what happens with an S corp election? And that's paperwork filed with the IRS. It's paperwork filed with the government to ask them to tax your LLC under different tax rules in a different way. And what happens, though, technically, is you become an employee of your own business. You become an employee literally of your own LLC. And you're still the owner of the business. It's still, this LLC still belongs to you, of course. But, for tax purposes, you literally become employed by it as well. And since you're employed by it, your business will pay you a salary. It'll pay you a wage. And it'll pay you a paycheck, just like you'd receive if you worked for someone else, like as an employee, as someone else's employee. It's the same thing. But the cool thing about S corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary amount. So, for example, let's say that, kind of talking about my example earlier, let's say that you make 100K. And with an S corp, though, let's assume that you pay yourself 40K. Let's assume that that's a reasonable salary for this situation. With an S corp, that first 40K is the only chunk of your earnings that's subject to the self-employment tax. The other $60,000 or just the rest of your money, kind of outside of your salary, those are considered distributions to yourself. And conceptually speaking, you can kind of think of that money as dividends almost. Some people use that term. But long story short, that chunk of money is no longer subject to the self-employment tax at all. So, assuming someone makes that much money, essentially, how you come up with your self-employment tax is you take 60,000 and you'd multiply it by 15.3%. And I believe that is a tax savings of around $9,200. So, and that's close to around 10% of someone's net income when they're making 100 grand. So once you reach a certain income level, the S corp, potentially could be be the way to go for you financially. We are a small business importing products from India. Should we use S corp or LLC? Well, generally, it's usually a good idea to start off with the LLC. Um, just go ahead and form an LLC. If you're in some sort of business activity, it's a good idea to start off with that structure. But then once you reach a certain income level, and when I say income level, I specifically mean net income level. After your expenses and your business write-offs and things like that. But Collective gives a recommendation of around $60,000 of net income in a 12-month time period. So in the next, like from starting right now in the next 12 months, if you reasonably expect to make around or to net around $60,000, then we would suggest having a call with us, kind of seeing where the business is currently, and we'll see if it's a good idea for you to go the S corp route. Okay. What are some upcoming important tax dates? Well, we've got to talk about tax dates because, if you miss those, you could get penalized, and, who wants to do that? But I would say probably some upcoming important tax dates is the estimated tax deposit date. So let's see. The next estimated tax deposit is due. Let's see. So January, February, March. The first one's due April 15th, of course. Then the next one is due July 15th. So we've already passed that, of course. But this next one, so like July, August, September, October, this next one should be due. Let me see. Let me do some quick research right here. Okay, so the next one is September 15th. So an important date that's coming up is the third quarter estimated tax deposit. And an estimated tax deposit is just essentially a tax payment that you give to the government throughout the year, to pay your taxes throughout the year. And the third quarter is due on September 15th. So that's an important date to keep in mind. And then the next one is due on January 15th. Like the fourth quarter estimated tax deposit is due on January 15th of next year, of 2025. So keep those two dates in mind. Oh, also too, I almost forgot. Another important date of mine is October 15th, because that is the deadline to file an extension. Or I'm sorry, that is the deadline to file a tax return that is currently on extension. So let's say that you filed an extension earlier on this year. You have until sorry about that, guys. Sorry about that. My tripod completely fell down. But you have until October 15th to file that return. So keep that in mind. Let me adjust my tripod here so we don't have another disaster. There we go. How can Collective help me with my payroll? Well, for one thing, Collective is an S corp company. So if you came on board with us, if you don't already have that done already, we would make an S corp election on your LLC. Or we'd form an LLC for you and make an S corp election on that one. We would essentially set up your S corp for you. And when you're the owner of an S corp, you need to have a payroll system. You yourself will be on payroll, you'll be on a paycheck, and you need to have some sort of system that officially runs payroll. And we'll provide that to you. And but that's just one thing we provide. We essentially provide everything else that's needed to maintain the S corp as well. So when you first come on board with the collective, what we would do, the first thing we do is set up your business if need be. We'd form your LLC, make the S corp election, get that set up, and then we'd set up your payroll processor, structure your paycheck, get that all going, and then we're also a full service accounting firm as well. So we would take over your bookkeeping and close up the books each month, give you your reports each month for that month, closing out the books. So we give you a profit and loss statement, a cash flow statement, and a balance sheet each month. And then you also have someone on your team called a member relationship manager. And you can essentially think of them as your account manager. So if you ever need some guidance, you're not sure how to proceed with your business, or you just like to, talk something through, you can have a conversation with them at any time. And then, kind of as we run your books throughout the year, at the end of the year, we'll file your S corp tax return. Because you have one of those now. You have a business return, that kind of comes into existence when you have an S corp. So Collective handles the whole shebang when it comes to the S corp administration. What are the top 3 benefits of Collective? Ooh, that's a good question. The top 3 benefits. I mean, of course, there's so many. I mean, the list is endless, but the top 3, for one, I would say certainly convenience. Before Collective, to have a complicated tax structure like an S corp and save money along with it, then you usually have to pay a CPA or a tax attorney, and have several softwares that handled your payroll and your accounting. You usually have to have a separate bookkeeper that kept your books in order. But when Collective came on the scene, it provided a way to rope all those services into one company, to where you're not scrambling all over the place. You have one company, you speak to one professional, and it's a lot more efficient and convenient that way. So that's one thing. The other thing is the efficiency in the price as well. Even if you don't join Collective, and let's say that you kind of run the S corp by yourself, like you kind of do it piecemeal. For one, you have to have a payroll processor like Gusto or ADP, some sort of HR platform that does payroll, and that usually on average could be like $60 a month, something like that. Then you need some sort of accounting software as well, to handle the S corp specific accounting. So that's usually the accounting software is usually another $50 a month, somewhere around there. So just in software cost, you're over $100 a month. But then you also have to find someone to file your S corp tax return, either like a CPA or a tax attorney, somebody like that, and those can be expensive returns. Those can be anywhere between $750 to $2,000. Kind of depends. So the price ends up being around the same as what you'd pay Collective as if you're doing it yourself. But a lot less support, of course, a lot less convenience. So that's what I'd say is the main pull of Collective. Why should the everyday profitable entrepreneur decide to elect for S corp tax status? Well, to save on money, and just kind of piggybacking off the example I did earlier, it's to save on the self-employment tax. That's the main reason. Now, there might be some other smaller reasons here or there, but the main reason is to save on that self-employment tax. All right. Okay. Is there anyone that should not be an S corp? That's a really good question, and I don't get that as much as what are the reasons why it should be an S corp? But and there are certainly some small business owners or just business owners in general that don't need to be an S corp. And for one, um, the if you're not at a certain income level, essentially if you're not making enough money, then that's one big reason why you wouldn't want to go the S corp route. So and the reason that is because usually at any point in time with an S corp you do save money, typically, but if you're making less money, you're usually not saving enough to overtake the I'm sorry, to overtake the cost that it takes to run your S corp. So, when you have an S corp, of course, you have to have a payroll processor. You have those costs. You have a professional that has to help you. And if you're not saving enough money to cover those costs, then what's the point in going that route? And another reason why someone might not want to become an S corp is, let's say that your business is heavily involved in fundraising, or you need to have several owners in your business and something like that. Then the S corp might be a concern because with an S corp, you can only have up to 100 owners in your business. So it might not be the best structure if you're heavily involved in fundraising and things of that nature. You might want to go with a C corp, can essentially have an infinite amount of shareholders. So it's an important thing to keep in mind. What are some common scenarios you've seen of entrepreneurs needing an S corp? Well, throughout my career here at Collective, one of the most common scenario I've seen is one of two things. Is either someone has kind of gotten tired of the W-2 grind and just kind of working W-2 for somebody else, and they decided to quit their job and grab some consulting clients in the industry that they worked W-2 in. So that's one thing. Or someone has gotten laid off, and that's it can be common with in the marketing field. I see the marketing market can kind of go up and down, but the good thing about that though too is marketing is a really good area to consult in. So when I speak to marketing professionals that have been let off, they've been able to quickly pivot because they've got people in their network. There's several people that have worked with them, so they get phone calls and ask them to consult on their case and take care of them. Okay. See. How do you know if it's the best way for your business? Well, like I mentioned earlier, it mainly has to do with income level. So essentially, if you're not making enough money, then it's not worth it to go the S corp route. At the end of the day, that's what it comes down to. So, and what Collective says is we give a general recommendation of around 60K, net income. When I say 60K net income, I mean in a 12-month time period, kind of like on an annual basis. So, if you're before that, it might be a good idea to hold off and reassess later on. All righty. Okay. Can a partnership be an S corp? Yes, it can. Long story short, a partnership can be an S corp. And a partnership, really all that is when two or more people are on an LLC. That's what a partnership means. And essentially, if you have a multi-member LLC and you make an S corp election, then yeah, you've got a partnership that has made an S corp election. That's how that works. Oh, is there any benefit to joining collective right now? Definitely, because at the end of the day, the longer you wait to become an S corp, the less money you save. Like the more that you needlessly pay in taxes. So, so sure, like as soon as you want to start saving money with an S corp, then you should join collective. What's the best business structure to have in the U.S. if you live overseas? Well, I mean, I would say just a standard LLC, and maybe with an S corp election. Like it just kind of depends on your tax situation. But I would say especially if you're just American, if you're an American citizen that's living overseas, I would say probably an LLC in the U.S. What's the benefit of having a bookkeeper? Well, really convenience. So at the end of the day, you don't get paid doing your books, like organize your transactions. You get paid working in your business, and trying your hand at your craft constantly. Um, so it just doesn't pay. It's not very productive to do your own bookkeeping. And oh, and here's another question that kind of rolls into it: is why collective versus a bookkeeper, CPA, or DIY? Do it yourself. And the reason that is because collective, like I said earlier, it's really efficient. It's able to rope all your softwares in and the service in, from human beings, from experts, with with around the same price as if you were to do it yourself. So, just a bookkeeper alone is around $300 a month, just for basic bookkeeping. And that's just one small part of collective service. We rope in a lot of additional services besides bookkeeping. Okay. I think I've got time for one more question here. Is there anything people don't know about collective that they should? I would say, for one, and I actually, I'm with at collective, like I mentioned earlier, you get someone on your team called a member relationship manager, and they kind of serve as your advisor. Someone that you can bounce ideas off of, or get tax support, things like that. And I'm friends with a lot, of course, with a lot of my colleagues in the member relationship manager department, and they tell me that members, should utilize them more. That they're available to have conversations. When anyone needs help. So it might be beneficial for you to set up, monthly meetings with your member relationship manager and go through your finances and, walk through how all the tools within S Corp work. So that's what I think mainly is if there's any, to answer the question, if there is there anything about collective that people don't know that they should, is you've got that advisor there that's there to help you whenever you need it. And that's all the time that I have today. I actually have to go on and talk to prospective collective members, but it was a pleasure. It was a lot of fun, like it always is every Tax Tuesday, and I hope to see everybody next week.